Hello, it's Cryptolyze. I hope you are well on this Thursday, December 7, 2023. We're meeting today to talk about FET, FETCH.IA's crypto, and as usual, we're going to dissect this video in two parts. A fundamental part where we will come back to what is FET, and then we will go to the graphs to project ourselves in the short, medium, long term on buying prices, selling prices, and that starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth €400, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. FETCH is a platform which aims to provide a blockchain infrastructure to deploy artificial intelligence. So, to be really very precise, it's not necessarily that it's the fact of being able to deploy, monetize integrations with artificial intelligence. The idea is that they provide a set of functional blocks. Whether it's the integrations, it's an automated integration with Discord, for example, or Slack, in which, in fact, I can deploy my artificial intelligence, my agent. We will explain what it is after through the integrations already updated. Provisioned by FETCH and then monetize it if people ever use it. This is really the principle behind FETCH. We must understand that having artificial intelligence is good, but there are several ways to use it. Either we have it on staff, which means that in all cases I am obliged to install it on my workstation, or I have it in SaaS, implied, for example, as ChatGPT, in which I have the possibility of having access to the services, but it is only access to services. The problem is that when I have, whether in one or the other, I don't necessarily have the ability to determine what they have access to and how I want to integrate them. It's relatively complex. In all cases, for example, ChatGPT, I am obliged to go through the API and, in fact, integrate the connection between ChatGPT and therefore, for example, Slack if I want. And therefore that means that I am forced to build an integration and service which allows the two to be interfaced. Through FETCH, I no longer need to do that, the goal being that I build my agent using, for example, artificial intelligence from the different blocks that have been made available. I interface it with the integration that I want, and I have a product that is already functional. To go even further, from the moment I have done this, I can make it available. I can deploy it and then monetize it. From the moment I have developed artificial intelligence and its integration around an agent, I can deploy this agent and earn money thanks to the use that is made of this agent. And that's also what's interesting about FETCH, is that they provide hosting, yes, but also at the same time services to the artificial intelligence services that are made available, and we will have a set of already pre-designed tools in which we will be able, for example, to build artificial intelligence directly with the FETCH tools to be able to access all the functionalities natively. Besides, in terms of fact, we have a diluted market cap, so not 250 million, it is now 599, almost 600 million. Okay, dilution. So that means that when we take the entire total supply multiplied by the price, this gives us the diluted market cap, which is the total valuation when all the tokens will be issued. So that's what interests us here to value. Is it undervalued or overvalued now? So we are at a little over $500 million in valuation for this protocol, a protocol which is also used for several things, therefore used for the design, for the deployment. Yes, but their desire is to go further and to instantiate a wallet which would make it possible to have all the artificial intelligence directly available. So I think their endgame desire would be the creation of a super app powered by artificial intelligence. But that really remains a very, very long-term roadmap. In terms of tokenomics, we see that we have almost finished a large part of the dilution. On the other hand, we still have quite a few dilutions at the end of the year, perhaps 10 which will arrive, which normally corresponds to 950 million FET where we should arrive. So we still have a little downward pressure at the end of the year and beginning of next year. Nevertheless, we have a project which is, all in all, relatively coherent. Does it have a vocation to persist? That's going to be the big question. I won't hide from you that by being a big user of artificial intelligence in the different projects I'm involved in, I always tend, in fact, to develop my interactions myself, because that allows me to be able to design something which corresponds exactly to me, which corresponds exactly to the needs of the projects that I have. So it's not something I would use personally, and I have a hard time seeing the average person using it. So yes, it's a marketplace to be able to sell your artificial intelligence, but it's like any marketplace. If we don't have a buyer, there is no point in having a marketplace. Likewise, if we don't have artificial intelligence made available, we have no interest in coming to this marketplace to buy it. And precisely, it's the notion of the chicken and the egg. In all marketplaces, you have to balance the two. And I find it difficult to see precisely in the long term the use of FETCH in relation to that. In any case, what is certain is that it is a protocol which will surf on the narrative of the artificial intelligence which is present on the NASDAQ and on the US macro, and which is also present in the field of blockchain, and therefore it can also be an asset which can be played purely speculatively around not the fundamental, but the narrative which will be structured around this side. Technically, where are we? This, you will see, is very interesting, in which we have already had quite a few things. We had an accumulation phase which lasted throughout 2020 and 2021. First acceleration phase on 2021. Second acceleration phase at the end of 2021, in which we had the implementation place of a Wyckoff distribution in BC, Arkansas, ST, SO, Utah, UTAD. Okay, classic. Stop of the upward trend, we retrace, we retest, we sink, we make a small accumulation, and we will look for the liquidity above the BC, in which we make the UT and the UTAD before making the bearish breakout in classic 3 times ABC for a breath, a new accumulation to then leave. Besides, we could have a BC, Arkansas, ST, SO, therefore a new distribution in progress, which would be much more macro to go. Look for the UT and the UTAD, therefore new 88ths, with the ruptures of the UTAD here, in this zone, in which we still have a big acceleration. What is interesting to see is when we did this lateralization phase, which was during June 2022 until overall the end of the year, 2022, beginning of the year, 2023, in which we had the explosion of artificial intelligence, and when we look from here to December 5, this was really the moment when we had the big hype around ChatGPT, start of the narrative, therefore lateralization, validation of the narrative, and upward acceleration. Following this bullish acceleration, we had a retracement and a breather, which was relatively long over the entire period when BTC was growing, and then we had a reaccumulation and a lateralization, before having the reacceleration, which was mainly driven by the BTC movement, where all the cryptos took off. We went to retest the upper part without breaking it, and that is very important to note. There we have 2 short-term possibilities. Either we are going to retest this part in which we have a small imbalance, and above all, we have a big zone of resistance. So at this moment, we will be able to consolidate here to leave with a very nice accumulation. There we will have a very good signal. On the other hand, if we do not hold to this level, that means that we will look for the large part of imbalance which is there, with a zone, who could be in this part before leaving. So those are the short-term parts, in each short term, if the narrative still holds. Once again, we had the first wave of the narrative, second wave of the narrative. Generally, when it's like that, a 3-wave narrative, a little bit like Elliotista. So are we going to have a third vague or not of this narrative? Is this going to be a narrative that will be fueled by the bull run, or is it a pre-Ull run narrative? This is also the question we will have to ask ourselves. However, what is interesting to see is that we are in a classic Elliotista schema. Wave 1, Wave 2, Wave 3, big Wave 3 of impulse, what we are waiting for, itself broken down into 5 waves of impulse, Wave 1, Wave 2, and therefore what we are waiting for is the big Wave 3. And so for that, we would have to have a retracement to then start again subsequently, so no 345 to look for a potential target of 168 here with an FET in the vicinity of the 2. Which would be interesting structurally in terms of the market cap that would give us a project in around $2 billion, which is not enormous compared to the potential of the general narrative, and therefore not necessarily to the potential of the protocol, but to the potential of the narrative in itself. We could see, why not, an FET at AI if we ever had a big AI narrative that would be put in place, which could potentially seek out the 20 billion market cap, between 10 and 20 billion market cap at the end of the bull run, and the end of the narrative. So that gives us great prospects if all the conditions are met. I hope you liked this video. If so, don't forget to leave me a like and a comment. It supports the channel. Don't forget that you have the investment guide available in comments and descriptions, and we'll see you tomorrow 7 for the daily.